Hey everybody, welcome back to Time Value Videos. This video is going to cover how to automate Bollinger Bands on Excel. So I'm going to show you what it looks like first, and then I'll show you how to do it. So I'm going to change my ticker symbol up here to CAT for Caterpillar. I already have my dates. I want daily prices. I'm going to make my moving average 20 in this case. I'm going to run the program. It's going to get the data, so I have a 20-day moving average, the upper and lower Bollinger Bands, and then a chart set up right here so I can look at how I might want to trade this. So that's what the macro is going to look like when we're done. Let me show you how to build it. Okay, so I went ahead and switched over to the workbook from when we did the simple moving average crossover just a couple videos ago. If you didn't get a chance to see the simple moving average crossover how-to video, I'll put an annotation on the side right here. So you can go ahead and click on this annotation and go watch that video, and that'll show you exactly how to make all of this. And so this just pulls in the simple moving average based on whatever time frame you want to put in. And it's going to be super easy to edit this macro, or edit the macro and this workbook to fit how to make the Bollinger Band one. It's going to be like really fast. That's how easy it is. So what we're going to do is we're going to start with this, and we're going to go over to our Visual Basic. And so I have the data get macro. This is the exact same one that we coded in the simple moving average crossover video. We're just going to have to edit the last few lines, and we can change it pretty quickly to be the simple movie, or to be the Bollinger Band one that I just showed you. So first thing we're going to do to do the Bollinger Bands, we need the adjusted close. We need a simple moving average of any time frame that we're looking at. 20, I guess, is the most common one, but you can do anything you want. And then these two columns are going to be our lower and upper Bollinger Bands. And so this one will be our lower band, and this one will be our upper band. And then the formulas that fit in here are going to be two standard deviations of the price movement, either plus or minus the simple moving average. So it's going to be really easy to do. We're going to go in here, and I'm going to change. So I'm just going to start. We have the end row. We figure out what the last row is, so that's in there. And then we have column 9 is going to be our simple moving average, and then column 10, which is J is column 10. We're going to have, instead of being a formula, it's not going to need to be a formula. We can just do equals. We'll start with lower band, and then cells 1, 11 equals our upper band. And then I'll just run it real quick so you can see. So it fills in our lower and our upper, and now the formulas that's going to fill in these two columns is going to be really easy to do also. And so we'll do column I is going to stay the same because we're just doing the simple moving average. Column J is going to change just slightly, and so the formula is the row right next to it. So I'll write it into the Excel real quick so you can see it's the same row and the column right before, which is our simple moving average. And then because it's the lower band, it's minus. And then I'm going to open a parentheses to make the math go through, right? 2, so it's minus 2 times the standard deviation. And it's the standard deviation of the prices. And it's depending on how far we're looking back. In this case, it's 100, so it'll be H2 through H101, and hit OK. I didn't close my parentheses, so it gave me an error. And so that's the formula that's going to be, and we're just going to copy it all the way down, but we're going to write the code in VBA to do it. So the way to do that is the cell immediately to the left. So in the R1C1 format, the cell immediately to the left is coded as RC open brace -1. It's a -1 because it's one column backwards. So C -1 is column before it. So RC -1 says stay in the same row but go back one column, and so that puts us at our moving average. So it's our simple moving average, and then minus, because we're in the lower band, minus, and then I'm going to open up parentheses, 2 times, and then instead of average we're going to do standard deviation, STDEV, minus 2 times the standard deviation of and then we're going to have the cells previous all the way through however far we're looking back, because cells 11:1 tells us to look back how far we're going, but that's looking at our other look back period, and we want to make sure all of our look back periods are the same. So I'm going to change that 11 to a 10, so all of them are looking at cell A10, which is our 100, our look back period right there. And then we have one back, and then column 2 back in this case, column 2 back in this case. So all that is exactly how we need it. Now, because we're doing a standard deviation instead of an average, we can't go all the way to the end row. We just have to go one short of the end row. And so that changes that. So that's all we need. I'm going to run the get data right here. And I didn't close my last parentheses, so I'm just going to do that and then finish running it. So if we look right here, our code worked. It did our simple moving average minus 2 times our standard deviation of 2 through 101. So if I were to change this to, let's say, a 50 and run it, so now it goes through 51. So it's going to change our look back period based on whatever we put in here and not in cell A11. So I can delete A11. Now we just have to write the code for the upper band, which now that we already have the lower band, the upper band is super easy. So I'm just going to highlight between the quotes right here. So I'm going to include the quotes. I'm going to do Control C. Then I'm going to go down here. I'm going to highlight from the underscore all the way down to the end of the next row and delete that. So now K2, our formula in R1C1 format, I'm going to do Control V to paste the same formula. So it's the exact same formula as before, except we're just going to need to make a couple changes. So when it was in column J, our simple moving average is 1 column before it, but now that it's in column K, our simple moving average is actually 2 columns before. And then we have 2 times the standard deviation of our prices, which is not 2 columns previous. It's actually 3 now, because from upper band to prices is 1, 2, 3. So we change that 2 to a 3. And then we go over here. We still have cells A10. That's good. And then we have our column 2 to 3 becomes a 3 right there. And then our end row, we can't go all the way to the bottom, so we do -1. And I should have the parentheses at the end. I didn't forget it this time. So now if I run the whole thing, now we have our upper band. Oh, I did mess up. This should be a plus and not a minus. So I'm going to go back here and I'll just change that minus to a plus. There we go. Get data. So now we have our upper band and our lower band, our moving average, our close, and our dates. And so that's all that's involved in our Bollinger Band chart. I'll go ahead and go to line. I'll insert the line. There's an ugly version of it. Let's go ahead and move that to its own sheet so we can see it a little better. So there we go. So that's how to do the Bollinger Band chart. And so a lot of people like to trade based on Bollinger Bands if they're outside the standard deviation or if they cross over the moving average. That would indicate a buy or a sell. Obviously, I'm not indicating a buy or sell to anyone on this video. This is not meant to be investment advice, so don't go trade on this unless it's your own strategy and you don't take anything from me. So just as an example to show you what it would look like on a 20-day, you can change this time frame. You can change day to W for weekly or M to monthly. Run get data. So we got our Bollinger Bands. We'll go back to our chart and see how it changed. So by doing a 20-day, it got to be a little more volatile, and so that could be better or worse depending on your trading strategy. But that's how to do the automated Bollinger Bands. So hopefully that helps. If you have any questions, feel free to put comments below, and I will try to get to them if I can, or maybe some of the awesome people who watch my videos will be able to answer some of your questions as well. That's how to automate Bollinger Bands on Excel. Hope that helped, and thanks for watching. If you like this video, let me know in the comments. And you'd probably like these ones too. Function. So normally functions you can do equals if and then do some stuff, or you can do equals average and find the average of some numbers. But you could actually make your own custom function to